Rohit Srivastava is joining in as well. He's fund manager at Sharekhan. Rohit, it's always a pleasure to have you with us here. Thanks very much. I don't know if you had a chance to hear Sarvendra earlier. Did you, Rohit? Oh, I mean, I don't need to put a question to you. I can just ask you what do you make of the view?
I would, break up my opinion into two parts. First is taking a long-term view. I'm not sure whether you're in a bull market. So essentially what we are looking at is that the market is rebounding a little more than what probably I expected, because I wasn't thinking that we would go beyond 6200. So that said, I think what has happened is there are two sections of the market for those who are bullish and bearish. If you're bearish, we've essentially been looking at selling into banking, metals, the weaker sections of the market. And if you're bullish, then you're looking at those sectors which are actually exposed to the global markets, because those have been going higher. So essentially you see technology, pharmaceuticals which are exporting, or Tata Motors which has a European exposure. Those are the stocks that are actually holding up the market. So there's a clear fractured mandate within the market. So when it bounces back, you see strength in one section. When it starts falling, you see weakness in the other section. And that's kept the market in a 200-point range now for almost 4 months. The question is, will you break out of the range in a sustainable rally or in a sustainable sell-off? And I think that's the real tough question to answer. What I would expect right now is probably the market can test 6400. Can it make a new high? Because it's come this far, I can't really rule that out, because some of the weaker sections like banking, which is what he was saying, have actually bottomed in the last week. They were still falling as the index was going up, which was keeping us on the bear side. And because they are bouncing back and can retrace somewhat, that provides some more relief to the market in the short term. But none of those risks have really gone away. When you look at the BRIC nations as a whole, is the emerging market issue really gone? If I look at Russia's stock market, is the stock market really in an uptrend? The answer is no. I think out of BRIC, apart from India, all the other three are actually down significantly over the last 7-8 months. We are probably holding out much better than them. And in that sense, we are an outperforming market. But there's still weakness out there in most of those sections, and specifically there's an issue in China, which is one of the larger economies. So you can't really take risk off the table. I think the risks are still there. They're still there, even related to our own economy. Nobody's really looking at growth, significant growth coming back. You can keep jumping with numbers. Will you grow 4.5 or will you grow 5.5 next year? But the point is, you're not going back to 8. So we are still growing very slowly, and I think the risk is that actually you slow down on growth if things don't turn out as expected from the election front. So there are too many risks. What you might get is you'll get these good rallies, and then you'll get some sell-offs again because of weakness in other sectors going ahead. So I would be prepared for those sell-offs rather than expect a sustained runaway in the market.
Yeah. But you are also at the margin turning slightly more positive, right?
In the short term, yes, because of the turnaround that we are seeing in the banks. So as long as the banking stocks show some momentum, I would look at the index possibly making a higher high, maybe testing 6400, maybe going higher. But the moment it reverses, I think we would probably change our stance very quickly.
Right. Okay. What are your top bets right now? Trades, short term, which is positive.
I think some of the stocks that the weakest ones that I was looking at actually showing some upside. So we're looking at stocks like Bank of Baroda, Reliance Industries. I think State Bank itself, maybe if it moves up a bit more, would give us an indication of a further move. But it's already moved up in the last week, so we are watching that. But I think Bob and Reliance were two which I thought could probably give you some short-term upside over the next couple of days.
Next couple of days or so. Any stocks look great shots right now?
No, No, we'd really wait for the sell opportunity to show up again. It's because, like I said, when we were getting bearish on the market, we were looking at selling banks and Reliance, and these stocks are still falling. In fact, most of the Reliance Group stocks were weak up to 2 days ago. But they're not showing the downward momentum right away. So we'll probably just wait and watch for the next couple of days for the short trades to show up again. But right now, we'll probably just look at whether opportunities on the upside continue to develop or they fade quickly close to 6,400. That's, I think, the key in the next few days to watch out for.
You've got an eye on the global as well, Rohit. What's your take? What are you seeing? Global markets?
See, on the US markets, we saw a sell-off essentially because of the Russian issue, and you've seen them rebound. But it's a bit early to say whether it's a runaway rally, because the Dow has essentially been in the same range for almost 7-8 days. And many of these markets, especially the US market, is quite overbought on the longer time frame, that is the monthly degree. So that creates some degree of near-term risk. And every time it's rallied up by the amount it has in the last couple of weeks, we've seen it at least consolidate. So I wouldn't expect a runaway from the US market right away. We'll probably watch for a few days, because there is still a risk of an impending deeper correction from the US markets as and when it comes about, because of the extreme overbought situation, and we need to be watchful of that. And the Russian situation, like I said, it may be temporarily behind us, but when I just look at the Russian stock index, its overall trend down doesn't appear over over a 6-month period. It's still possible that there's another 20% downside risk to the Russian market for whatever reason, whether it's because of domestic reasons or because of the external factors that showed up. I'm not sure, but there's still downside risk there. So I think there are, and China, which I spoke about some time back, I think is probably one of the weakest markets yet. It's still not showing any signs of a turnaround from the Chinese stock market point of view. So that remains a risk from the global side.
Got it. Rohit, thanks very much for dropping by. Great chatting with you as always. Appreciate it very much. Rohit Srivastava, Fund Manager, Sher Khan.